The liquidity in business definition is how quickly your assets can be converted to cash. If you're a business owner, you know business liquidity is important because it not only represents the underlying financial health of your business, but also allows your business to quickly pivot in response to certain circumstances or opportunities. What does liquidity allow your business to do? Experts recommend having at least 3 to 6 months of operating expenses on hand. Of course, as with anything else, there is always a disparity between what's recommended by the so-called experts and what people actually do. In any case, the importance of liquidity is that it can essentially make or break a business. Businesses with a high degree of liquidity have the flexibility to purchase more inventory, new equipment, or hire help. They have an easier time expanding and growing. They can survive recessionary periods by tapping into their savings or liquidating assets. And they can also respond to emergencies with greater dexterity. How much liquidity does the typical business really have? A substantial determinator of business liquidity is cash flow, since the difference between inflow and outflow can result in the most liquid asset, which is actual cash. According to a study conducted by J.P. Morgan Chase, the average median daily cash outflow of a small business is $374, with an average median daily cash inflow of $381, and some wide variation across and even within industries. What types of assets have a high liquidity? Real estate. Real estate is a highly illiquid asset because there are many legal formalities around its exchange that take time to process. Precious metals. Precious metals are also considered highly liquid, while most forms of business equipment are not, although they may be more liquid than real estate. Inventory is fairly liquid, while human capital is not, at least immediately. Aside from cash, the liquidity of your business will be determined by what type of business you run. If your business involves buying and selling gold, your business has a degree of liquidity. If your business involves preparing tax returns, it probably has a low degree of liquidity. How do you assess business liquidity? Business liquidity can often be assessed with liquidity ratios, of which there are a few different types. Current ratio or working capital ratio. This ratio measures how well a company can pay off its debt obligations within the next 12-month period. It's calculated very simply by dividing a ratio of current assets by current liabilities. In terms of current liabilities, this includes financial obligations such as accounts payable, payroll, taxes, short-term debt, and the current year's portion of long-term debt. Quick ratio or acid test ratio. This ratio is similar to the current ratio, but a little bit different in that it only factors in assets that can be liquidated quickly. This ratio is found by adding up cash, marketable securities, and net accounts receivable, then dividing that sum total by current liabilities, which would include accounts payable, wages, taxes, short-term debts, and the current portion of long-term debt. Cash ratio or absolute liquidity ratio. Money talks and cash is king, as they say. This ratio examines how well a company can immediately settle an obligation. The ratio is found by factoring in only actual cash and marketable securities, and not accounts receivable, then dividing that number by current liabilities. Business lending can improve your liquidity. Getting a business loan when you don't need one, and using that loan to create cash reserves, may be one of the smartest business moves you make. Consider our perusal of the study conducted by Chase Bank and recall how many businesses have less than 1 month of reserves, and how small the margin is between their inflow and outflow. Many of these businesses are putting themselves in the danger zone with their liquidity ratios, a place your business does not have to be if you explore the right business funding. If you are interested in offering point-of-sale financing for your business or in need of a business loan, reach out to one of our account executives at 866-651-8724 or visit us online at eccspayments.com.